right, welcome back to the Midweek Update. Today is Thursday, March 10th. My name is Patrick Dunawilla. I'm the editor of the chart report. It's been a wild week for commodities, so I wanted to bring on Ian Cully. Ian is the commodity analyst over at All-Star Charts. Ian, how are you today?
Excellent. Thanks for having me, Pat.
Of course. I want to talk about stocks real quick. There's really not much to say there. Not much has changed. The S&P 500 is down about a little over 1.5% on the week. It's still battling with those key January lows that we've been talking about for weeks now. You have momentum diverging positively, not making a lower low there, which is encouraging. But like I said, we're still in that short-term downtrend. So, if that changes in the next couple of weeks, great. But until then, it's tough to get too excited with the S&P 500 kind of still in that short-term downtrend. Moving on to the Russell 2000, I think this is kind of one of the more important indexes to watch right now. It's actually holding above those January lows, slightly positive on the week. So it's a little bit more encouraging, surprisingly, because it's been beaten up harder than some of the other indexes, but it's actually holding in there pretty decently. What you want to watch for is a higher high above those highs that we made earlier in the year, which would also coincide with us re-entering back into that range that we'd been stuck in all last year. So that's one to watch for next week. But moving on to sectors, I think the energy sector is kind of the most important one to watch here. Obviously, it's the best performing sector year to date. It's up about 40% and it's only March. But we're running into a pretty interesting level here. This was resistance all throughout 2016 and 2018. We got rejected there several times. And here we are. We're testing it now this week. We saw a little bit of backing off that level when we did test it, I think, yesterday. But, I think that'll be a really telling level to watch, that 79 level in XLE over the next couple weeks. Do we break it and go higher? Do we kind of consolidate below it for a while? Or do we just straight up get rejected there? But Ian, let's move on to commodities because that's where a lot of the action is this week. I think last week was the best weeks for commodities since 1974. And then yesterday you had the worst day since 2008. So it's been a wild market in commodities. What do you make of all of it? I think the best place to start is probably crude oil, right?
Yeah, it's been absolutely wild. And when we look at crude oil and the massive gap up that we had on Sunday's opening, it's a news-driven market right now.
Yeah.
And all we can do is pay attention to our levels and trade accordingly.
So what do you think those levels are for you?
For me right now, looking at the 112 level, when we zoom out, around 112 is where we had a lot of overhead supply resistance zone in 2010, 2012, 2014. Again, crude oil gapped above that Sunday night. It has already slipped back below that level. So now
I think we traded all the way up to what, like 130 before we backed off. We didn't get quite to those 2008 highs around 150, just below those. We didn't get quite there, but we're back now towards that 112 level. What I think we ended at like 109, right, today?
Yeah, down around 109, 106, down around that range. So yeah, the market is just a mess right now. We're looking at crude. So I mean, kind of want to stay away below 112. Crude could fall all the way back down to 76 and retest those 2018 highs. Or news could come over the wire tonight while we're all sleeping. We could wake up tomorrow morning. It could be at 150.
Mm-hmm. I think what's interesting is it's pulled back very sharply over the past 2 days, but you're still holding above the 20-day moving average, that short-term moving average. So short-term, the trend is still higher, even though we've seen this massive correction in the past 2 days.
Well, that makes sense given the explosive nature of the last week.
Right, that Sunday gap up you're talking about, or?
Yes, and even last week. I mean, crude was ripping above 100 last week, so that makes sense. That makes sense. Here's another daily chart. If you look at the 100 level as potential support, but below there, really, we could get all the way back down into the 60s.
All right, copper. I know this was an interesting one last week because we broke out to all-time highs. We broke out above last year's highs and the 2011 highs, which are kind of around the same levels. But then we've given it all back, right? Is it too early to call this a failed breakout? What do you think?
I think it is. I think it's too early to call it a failed move because we're still above those 2011 highs, those former 2011 highs. I think that's a very, very critical level to keep an eye on. It's around 459. As long as we're above 459, still very constructive copper. So we're kind of in that limbo zone between 459 and those former all-time highs from last year around 288. If we lose 459 and continue to slide lower, then copper still has a lot of work to do. But for right now, maybe it was just a premature breakout. It was just an oopsie. It needs a little bit more time to digest overhead supply, and we resolve higher here shortly.
Yeah, I mean, a lot of these breakouts too, we're talking about really long-term breakouts, and you can't really expect them to just play out and break out and start falling through within days. Sometimes these take weeks, and it's a process, correct?
Yeah, absolutely. And also to see copper reclaim or to claim new all-time highs, but only for about 24 to 36 hours.
Yeah.
So that, maybe it's just, an oopsie and it's back in its range. It just needs a little bit more time. But if copper loses that 459 level and starts to slide lower, then we need to keep an eye out for last year's lows. So if it undercuts the 2021 lows around $4, then we need to go back to the drawing board and really start to question the commodity supercycle thesis.
Oh, interesting. So copper, you're saying, is one of the most important to watch within commodities, not oil, not gold, not some of the other ones that get a lot of attention, lumber, wheat. Oh, very interesting. All right. So you're watching, what are the key levels you're watching?
So I'm watching 459, the former 2011 highs.
Okay.
And then below there, watching the $4.
All right, Ian, let's move on to precious metals because there's a lot going on there. So what do you think? Let's start with gold. What are some of the levels you're watching? I know last time you were here, you were saying it's not quite there yet, but it's made some big moves since. And is it there yet? Or is it time to start looking for opportunities in the gold miners?
I think gold's very close to a major breakout. And I definitely think it's time to be looking for opportunities in the precious metal space.
Okay.
The setup in gold is very similar to what we just outlined in copper. The 2011 highs are a key level, and gold is around 1924. So as long as we're above 1924, we want to look for opportunities in the precious metal space.
I like that. That's a pretty simple way of looking at it, right? Keeps it easy. And then if it breaks out above, the 2020 highs, even more bullish, right? It's off to the races, right? And that's around what, 2050 or something?
2089, about 2089.
Yeah. So just above 2000, if we get, break out above 2100 or something, off to the races for gold, and it should probably be a great environment for gold mining stocks, right?
Exactly. But until we get that decisive close higher above those former highs, former all-time highs, it's probably going to be a little messy. And we've seen a lot of volatility this week, and there's probably more to come until we break above those former all-time highs.
Yeah, I mean, just anecdotally, I know sentiment, everyone's seeing this chart on gold, and I think it would make a lot of sense for it to just kind of pause and consolidate for a little bit before you really see the breakout materialize. And again, we're talking about long-term breakouts here, so this could take weeks or maybe even months to play out, correct?
Absolutely. So yeah, there's no reason why gold shouldn't frustrate us for another few weeks or months. I mean, it's been frustrating us for a year and a half now, so.
Yeah. But so let's say next week we do see gold break those highs, or not even. You said as long as we're above those 2011 highs, it's okay to start looking for opportunities within the space. So what are some of your favorite gold mining stocks at the moment?
Newmont.
Newmont, yeah, that's a fan favorite right there.
It is. It's a bellwether. This is great information seeing Newmont break above those former 2011 highs. I really like Newmont long above 72.50. If we're above 72.50, I'm looking at 108 initial target, and it could probably go much, much higher.
Yeah, I mean, that's a massive base. That's about 10 years, right? So Newmont, definitely one of the bigger ones. A lot of eyes on that one too. This one though, Sibanye-Stillwater, did I say that correctly?
Yes.
That one, I've heard a couple other people talking about it, but I hadn't heard about it prior to a couple weeks ago. What is it? It's a South African?
Correct. It's a South African mining.
And it's not just gold, right?
No, they also mine PGMs, which are platinum group metals, which include platinum, palladium, and rhodium.
PGMs.
So it's cool. It's not just a gold miner. It's almost just. It's like you get a broader.
Yeah, I mean, you mentioned palladium in there too. That chart's breaking out as well. So you get that exposure in there as well with this name, SBSW. What are some of the levels you're watching there?
So as long as we're above 21, we want to be long, buying on strength with our first target, initial target around 32.50 and a secondary objective around 51.50. So we want to go and have our orders in place because these things move. I was just talking to Steve earlier in the day about how just commodities in general, and even the natural resource stocks and commodity related stocks tend to have explosive breakouts. So this isn't something that we want to be chasing. So we want to have our orders in place, buy on strength above 21, initial target 32.50, secondary objective 51.50. There we go.
Well, Ian, I think you laid it out pretty cleanly for us there. So, thank you for coming on the show, and I'm sure we'll have you on soon because it doesn't look like this train's going to end anytime soon as far as the party and commodities, right?
Right. It was a pleasure, Pat. Thanks for having me.
Of course. Well, hey, thank you guys for watching. If you enjoyed the show, be sure to like and subscribe and join us again next week. Thanks.